saw a bit of short-term selling about 3 months, and then we kind of broke above the channel, flattened out a little bit, it point down, even more down. So what is the best moving average strategy that you can use to increase your odds of winning in the stock market? How do you actually use moving averages, right, in terms of trading in the right direction as the trend? Hey guys, Joey here, top tier MyZero trader in Philip Securities, and in this video, I'll be talking about this strategy called the moving average strategy. How do we use this very simple indicator? You can put it on any single chart, and that's where you can actually take trades that are along or in the same direction as the trend, and that's where you want to be aligned with the trend, not against it. So that's how moving averages can help you. So you want to know about this moving average strategy, make sure you watch this video all the way to the end. Let's go. So let's pull out some of the moving averages for the entire market. So this is the Nasdaq Composite Index that tracks the top technology companies in the US. So you can see, right, we have put out just two simple moving average, right? You can see this is the red line. The red line is what we call the 100 days moving average, and the blue line is what we call the 200 days moving average. It's a longer term kind of moving average. So the blue line will react a little bit more slowly compared to the red line, the 100 days moving average. So very simple, right? In order to use moving averages, we first of all want to know why we want to use a certain period of moving average. So for example, the 100 days moving average and the 200 days moving average is for me to actually kind of gauge the longer term trend. I say again, the longer term trend, not the short term. The longer term trend, it could be up to 6 months to a year or maybe 2 years, right? That is how the longer term moving averages can be used, right? So this is the Nasdaq Composite Index, and based on these two lines, right? Based on these two lines that gauge the longer term trend. Now, how then do we know if the trend is up or down? Just like by looking at this red and blue line. So very simple. The first thing you can do is that you want to see prices above both of these moving average, right? So you can see as long as prices are above both of these two moving average, above the red line, above the blue line, then we are pretty much in an uptrend. That's the first thing. The second thing is that if you were to see the short-term moving average or the 100-day, the shorter one, right? 100 and 200. So 100 will be the shorter one. So if you see the 100 days moving average red line above the blue line, all right, and price is above both of them, well, that is where we are able to see that the longer term trend is up for that particular stock or for that particular market or that index, right? So you can see for Nasdaq since like 2020 to 2021, you see this red is above the blue. Both of these two lines are pointing up. So both pointing up, the red is above the blue, plus the prices are more or less above them. We are pretty much in an uptrend. Does it make sense? Just by looking at the two moving averages. And somewhere over here, look at this, right? So this was somewhere in like March 2022, whereby we had the rate hikes, inflationary pressures, right? So we kind of like broke certain support levels. So support is one of the things that we look at as well, besides moving averages to tell the trend. So that's where we get more confirmation. But I'll not talk about support and resistance in this video. We'll be pretty much just focusing on moving averages, right? So you can see right over here, in about March 2022, right? So it was an uptrend for like more than a year. But somewhere over here, you can see the red line, the 100 days moving average, actually crossed down below the 200 days moving average blue line. So the red went below the blue, all right, and that's how it became below, right? You need to cross below it first of all, right? And you can see that prices actually went below both of these two lines, right? Pretty much below both of these two lines, and now the red is below the blue, right? So all this while from here, red is above the blue. When we cross March 2022, red is below the blue. So we have pretty much turned into a downtrend in the longer term, not short term, right? In the longer term, right? And longer term just means like it's about 6 months to a year kind of outlook, right? And yeah, we did sell down after this. You can see March all the way to around May, right over here, May the previous next year, right? The next year, right over here. That is where we saw the red line, the 100 days moving average, crossing back up above the blue line. That was in May. So from March to May, it's about 1 year and 2 months, right? So you can see this is kind of like a longer term trend. We are not just down for like a couple of weeks or months, but for almost 1 year and 2 months, it was in a downtrend until this thing happened right over here. And red line, all right, same thing, 100 days moving average, crossed back above the blue line, the 200 days moving average. When that happens, that gives a confirmation that the trend can potentially start to point up, all right, or it could be the beginning of a longer term uptrend, right? And after that, you can see both the red and the blue started to point up, and this is where we are right now. So the red line and the blue line, you can see this is where we are. Are we in a longer term uptrend? What do you guys think? Well, the answer is yes, right? Because the red is still above the blue. Both of them are pointing up because prices is still kind of like above both of them, right? So the longer term trend still looks up for now as of like August 2024, all right? As per doing this video, right? And it's not just up like, since last week or last month as mentioned, right? It's up since May last year. For more than a year, we have been up, right? So that is the longer term trend, and how the 100 days moving average and the 200 days moving average, the longer term moving average, can help you gauge the longer term trend. So I personally only use the 100 days moving average and the 200 days moving average to gauge the longer term trend. I know there are so many periods of moving average, right? 50 days, 80 days, 90 days, 100, 120, 150, 200, and then you have like 5 or 6 lines on the chart. Don't do that, right? Just keep it simple, all right? For me, I think just it works fine. We have a longer term 200 days, we have 100 days, mid to long term kind of outlook, and these two lines give me a gauge of where we are headed in the longer term, all right? So that is how you can gauge the trend, right? But what do we want to do when we gauge the trend, or after gauging the trend? So you can see right over here, since like maybe 2021 to 2020, right? It was in a longer term uptrend for more than a year. So I think right? Basically, if the trend is up in the longer term, you want to think about taking trades along with the trend. So if the trend is up, you want to think about buying in the same direction as the uptrend. And of course, when we're to see the trend turning down, like what I mentioned over here in like March 2022, when there were bad news in the market, rate hikes and all that, we turn into a downtrend for the entire market. And that's where you want to reduce some exposure, you want to get out, you want to maybe not hold stocks all the way down, but maybe even think about taking trades in a downwards direction to ride the downtrend. Does it make sense? All right, so that's what you could do to ride the downtrend. And when it eventually turns back up right over here, when the 100 days goes above the 200 days moving average, well, that is where you can start to position yourself again to get back in after getting the confirmation, right? To ride the reversal, to ride the beginning of the longer term uptrend and start thinking about taking buy positions, right? Whereby you are finally now in the same direction as the trend, right? So that's how, after determining the trend, right, that's how you can take trades to align yourself with the trend. So we have talked about the 100 days moving average and the 200 days moving average, right? But this is the longer term trend, right? So say 6 months to a year or more than a year kind of outlook, right? But in the short term, while the trend is up in the longer term, right? In the short term, can we actually see some weakness along the way, like 1 week or 2 weeks or 1 or 2 months? Can that actually happen? Well, the answer is yes, right? So it doesn't mean in the longer term uptrend means you go up every day and you go up forever. No, right? In the short term, like a week or 2 or 1 month or 2 months, we can also see weakness in the short term. And look at this right over here. So this is like maybe the Nasdaq. So somewhere over in July last year, 2023, you can see we started to see a bit of selling, swing up, swing down, swing up, swing down, and it forms a little bit of a lower highs. You can see right over here. So this is what we call a bit of a channel resistance level. So we saw a bit of short-term selling about 3 months, and then we kind of broke above the channel resistance level, and you can see the uptrend in the longer term actually continue, right? So there was some short-term selling. Same thing over here, right? We did saw a couple of consolidation right over here. It swings up and it breaks the support, went down, consolidated. So some short-term weakness for about 3 weeks to a month. And same thing, right? Over the past month as well, we saw some short-term weakness as well, right? Went all the way up and it starts swing up, went even lower, and that's where we found a bit of a bottom. So in the short term, we can also see weakness, right? It could be a month or two, it could be 3 months, it could be 1 week, it could be 2 weeks, but it is normal to see short-term weakness while the longer-term trend is up. And this begs the next question, right? If the longer-term trend is up, right, but in the short term, we actually see weakness, right? It's a short-term downtrend. I say again, short-term downtrend. So the question is, should we then be buying? Because you might say, hey, the longer term trend is up, right? You should be buying, right? But the short term trend is down. Should you actually be buying? Well, to answer this question, I would say that we preferably would not want to buy when the short term trend is down, right? Because we want to be aligned not just with the longer term trend, but also with the short term trend. It means we want both Yeah, I say again, both the longer term trend and the shorter term trend to be up, to both be up, right? Because when that happens, then it is harder to be wrong because you're along with the trend for both of them, right? The short and the long term. Does it make sense? Right? So how then do we tell whether the short-term trend has turned from down back to up, and that's where you could start to think about getting in again? Well, we can pull out another shorter term moving average. Let me just pull out what we call the 20 days moving average. So before I continue, guys, if you want to get some of my top trade ideas live, daily, right, by WhatsApp, so much faster, right, make sure you click on the link below this video. Check out how you can become a VIP client of mine in Philip Securities for free, alright, and that's where we provide some service as well at no additional charge. So that's where you get some of our top ideas daily by WhatsApp, market updates on my private training video as well, and more personalized service, and you do not pay anything more, especially if you are trading. I mean, you have a trading account in Singapore and then you don't get any service from your own broker, you don't get anybody to send you anything or ideas or videos or training or WhatsApp. Check it out, the link is right below this video. So I've put out this green line right over here that is called the 20 days moving average. So now this is the short-term moving average, the 20-day period, right? So this is the green line. So let me just remove all the drawings and circles right over here to be clearer. So you can see right now there are three lines, right? The red and blue, which I talked about just now, the 100 days and the 200 days longer term moving average. And now we have this green line, right? The 20 days moving average. You can see that this shorter term moving average, it is more sensitive because it's a shorter term period. So it follows prices a little bit more closely, right? So price moves up, goes down, it goes down. It follows more sensitively, right? So how then do we tell if the short-term trend is down? Well, same thing, right? When, like for example, right over here just now I mentioned that we actually kind of like swing up, swing lower, swing up, swing down, swing up, swing down. It was a bit of a short-term downtrend for like about 3 months, right? That was just by looking at the prices. But now, if we can look at this 20 days moving average, you can see that this 20 days moving average line was up, up, up. So it's very strong short-term uptrend. And it started to flatten out and it started to point down. Yeah, once it starts pointing down, that is the first sign of the short-term trend turning down. So it flattened out a little bit, it point down even more, down, 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 down. So right over here, from when it first point down, all the way to over here, right, I would say that it is pretty much in a bit of a short-term downtrend just by looking at the 20 days moving average, the green line, whether is it pointing up or down, right? So if the green line is pointing down with prices kind of like below it, then it is pretty much a short-term downtrend. So when that happens, probably not want to buy even though the longer term trend is still up, because we might actually break a few key supports and hit even lower, right? And it might go down and down and down, and this green line can continue to point down, right? So you have no idea how low it can go. Why not wait for it to maybe reverse back up, like maybe what you see over here, right? Maybe right over here, when finally the 20 days moving average, this green line started to flatten out and point up right over here. So once it starts to point up over here, and of course prices went above the green line, when that happens, that is a confirmation. Of course, we look at other things like support and resistance and some other indicators, but when that happens, right, just by looking at the 20 days moving average green line, I would say that the short-term trend is no longer pointing down, right? It is pointing back up, right? It was like down for like 2-3 months, but now it is back up, and it is aligned or in the same direction as the longer term trend. So right over here, when this happened, you see that now not only the longer term trend is up, but the short term trend is up as well. When that happens, you can see that that's where we started to see that rally all the way up. It swings up. Look at this, right? So the green line started to point up, 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 up for like about 5-6 months. And same thing over here, we saw some weakness when the 20 days moving average line started to slope down, right? For about a month, right? So some short term swing to come back in. Same thing, we sloped back up. Prices went above, uptrend in the longer term and short term, and we started to see that rally all the way up. And this is where we are right now. You can see that over the past month, right, same thing, right? We saw the green line started to flatten out, point down. So that's where we saw some short-term weakness, which is correct, right? We did sell off quite a heavy, massive sell down in the past month due to the unwinding of the carry trade, recession fears and all that. And we did sell, right? So in the short term, we actually saw weakness. But right now, you can see that we are looking at the 20 days moving average, this green line, starting to flatten out, maybe even starting to point up, like something like this over here, right? So it's something like like this over here, right? So this, something like this. Now we are maybe right over here whereby prices have just gone above the 20 days moving average. So the short-term trend has just started to kind of like point up for the Nasdaq Composite just by looking at the green 20 days moving average, right? So now I would say that not only the longer term trend is up, same thing like over here, right? The short-term trend has started point up as well, back up again, same thing now is a present, back up again. So that's where potentially we might start to see the reversal actually happening, right? We might start to push towards like the next resistance at about the 18,800. That's where potentially some selling can happen again. Of course, if we break a certain resistance, that's where targets can be revised higher. So all that will be for another video, right? Today's video is just very simple, just talking about moving averages and how you can tell just by using moving averages, right? The longer term trend, not only that, but you can also tell the short term trend and how you pretty much want to be in the same direction as both the longer term trend and also the shorter term trend when you are taking any buy position. So there we have it, guys. This is pretty much the moving average strategy that I've been using for more than 10 years now to be aligned or take trades along with the trend, right? So of course we look at other things like candlesticks, some other indicators, support and resistance, the zones to enter even though the trend is up and all that stuff. But if you want to find out a little bit more on the entire strategy of my one good trend strategy, you can attend one of those free webinars that we're still running. The links right below this video. All right, but I think today it is pretty much just talking about the moving average, right, and how you want to be aligned with the trend, right? So if you like this video, guys, you got some value out of it, you learn something, you get great to pull out the moving averages and apply it on your stocks. It could be the index, it could be any stocks, and that's how you can immediately tell if you are in the same direction as a trend, right, in the short term or maybe even the long term. All right, and that's what you could do, right? So Joey here, thank you so much for watching. If you found some value, go ahead to give me a like, smash the subscribe button, hit the follow button so that you will not miss out on any videos like this, and that will really help out the channel as well. I'll see you in the next video. Take care.